We're starting a new module, and today we will talk about capital market analysis. In capital market analysis, we're looking to analyze first the value and return for the stock market, which is represented by indexes, and second, value and return for the bond markets, which is usually represented by interest rates. Financial analysts must consider the expected capital market environment, and capital markets consist the securities and financial markets, but in this course and in project our emphasis is focused on securities market. The adequate valuation of finances is impossible without conclusions about capital markets. The attractiveness of expected return is judged by investor in terms of the attractiveness of alternative investment returns. And very often the bond yield can be taken as a comparative rate for analyzing the return on stocks. So it's necessary to analyze capital markets. Attractiveness of investment in capital markets also determined by the continuous trade-off between the risk and return, and it's important to understand the overall situation in capital markets. What is the returns? What kind of risks exist? And etc. Useful sources of information for capital market analysis can be the classifications of Moody's or Standard & Poor's or Fitch Ratings, and there are many other classification organizations. And these indexes compose the representative top quality securities. So when we look these classifications and we look on the ratings, we can understand the capital markets. Good source to use and very useful. The interest rate level in capital markets determined by supply of savings, by demand of funds, and also by expectations of inflation. Obviously, when investors invest, they have some money available, and normally it's really correlated directly with savings. For that reason, we want to understand what is the level of savings, what is the supply of savings. This is from point of view of investor. From point of view of businesses, of companies, we need to look demand for funds, because the businesses, they need fundraising to run their business, and they create the certain amount of demand. And supply of savings and demand for funds meets in the capital markets, and the trade-off between supply and demand creates the interest rates. Also, another factor that affects on interest rates is the inflation. So in order to predict the future interest rates, we need to look for supply of savings, for demand for funds, and also we need to have some expectations of future inflationary growth or decline. And during the valuation of capital markets, there are different steps, but the principal steps are, during this analysis, we want to forecast the earnings for capital markets in general, the average earnings. Then when we have this estimate, we want to estimate the dividend payout ratio, and afterwards we can select a capitalization rate for analysis. So basically what we want to know what will be the earnings from particular business. We want to estimate what part of those earnings will be delivered as dividends to shareholders, and based on that we can select or calculate the capitalization rate, which is necessary to analyze the finances of business. So all necessary information about project, about the next assignment, you will find in Blackboard, and please feel free to ask your questions if you have any. Thank you.